business. Mira Business FM.
This is The Morning Drive. It's Mira Business FM. Good morning to you and a very warm welcome all the way from the United Kingdom to Jeff Rhodes, the MD for Business Development, Middle East and Asia for Monetary Metals. Jeff, it is nice to see you.
Very good morning to you.
How are you this morning? How is the mood this morning? We're recording this or streaming this live as well, the day after Argentina beat England to get through to the World Cup final 2026.
It would be strange actually if we started our chat about gold, not talking about soccer. It was Premier League before. Yeah. Now it's the World Cup. Did you watch it, Tim?
I did. I kind of. It's terrible. I hate saying this as an English person. I have to admit to that. But I kind of lost interest in the second half and stopped watching for a while. Then I went back and it was 2-1. I thought, oh well, time to go to bed.
Well, the best team won. There's no doubt.
Yeah,
they did. And, fair dues. I thought that Argentina were fantastic, and England weren't. It's I think we had about 10 defenders on at the end. You need to score goals to win football matches, Tim. I know that much about soccer, but it was very good. And I would say congratulations to the US, Mexico, and Canada for a really, truly superb World Cup. It's been brilliant, and we have the top two teams in the world in the final.
Yeah,
which is great.
It's kind of the way it should be, isn't it? It's funny. We talked kind of on and off about the World Cup with people that come in. We've talked about it. There's most of the guests that we have here mention it in some way. But the one thing you do notice is before the World Cup, the press, the media are always looking for the extra bits of stories, how it's not going to work, and it seemed to work pretty well. And the stadiums in the US, in particular, fantastic.
Well, it's incredible, and it's clearly the way to go in our part of the world or in the Middle East, because obviously we have the heat of the summer and so on. But the stadiums, to have stadiums in the US that were air-conditioned stadiums, it's amazing.
It does.
But of course, it is possible to do it. I mean, I love tennis, and watching Wimbledon. Wimbledon was transformed when they had a roof, and you could enclose it. And England really in June normally rains a lot. June, July, it rains a lot, but Wimbledon solved their problem with that. And Wembley, of course, does have a roof. You would have thought that going forward, the big stadiums in the UK probably should be enclosed, or the ability to enclose the stadium, and then you can have a lot more events going on. So yeah,
it's a really good point actually, and the obvious argument is the cost. It's a very difficult thing to do logistically. It's very expensive. There are zoning regulations. There may be particular planning permissions, whatever it is. But it's most of these teams are such huge teams. It's such a big sport. And if you could do what your team have done, Tottenham Hotspur, for example, and use the ground for different things quite easily, famously you've got that kind of extra pitch underneath, that slides in and out. You can make a pretty strong business case for it.
Well, you definitely can, but Tim, looking at this, wouldn't it have been better to have a roof so that it's not. I mean, the Americans have shown you can do it, but anyway. But the one thing that hasn't got a roof, of course, is gold.
Oh, you are so smooth at times. Do you know what? Actually, I wanted to go back to basics with you a little bit today, because to kind of look at where we are in the market in the current cycle. We're halfway through the year. Gold began this year at an all-time high. It's kind of spent 6 months coming back down to earth in a way. One of the sharpest corrections in gold's modern history, probably. But lots of counterintuitive stuff going on that you and I have talked about quite a lot. So central banks are still buying. Silver's on a roller coaster. Wall Street can't agree whether the next stop is $3,000 or $6,000. But this is where we are now.
It is, and in my view, given the developments that we've seen since the end of February, and the fact that obviously the world is concerned about inflation. Inflation is driven by many things, but particularly energy costs, and the conflict in the Gulf saw oil prices going to 120. So it's understandable that there was a lot of chatter, and there has been a lot of chatter about interest rate hikes to cool down inflation. But that, for me, is going away. And when you look at crude at the moment, we've got Brent 85.
Yeah.
It's 85 from 75 last week because the conflict has, if you like, got a bit worse again. But still, gold is hanging in there. And I've just looked, since July, we've been between 39.50 and basically 42.50. And that doesn't seem to be changing anytime soon. It's good for gold that in the circumstances, it's doing so well. It really is holding in there very well. And when you look, you see platinum and palladium posting quite strong gains this week. I think the outlook is good. Central banks are still buying. They will buy more when we get to the end of the summer and the investors, traders get back to their desk at the end of August and look at where the markets are. I think their conclusion was gold has done very well in the circumstances, and I keep saying I'm like a broken record, I know, but I easily see gold back above $5,000 and silver back, in three digits. So I feel the market has done relatively well, considering we're having to deal with, the threat of rate hikes. By the way, did you see the expectations for a rate hike in September has fallen below 50?
Yeah.
So they have this kind of measurement, I guess, Reuters speak to lots of people around the world, and they get input on interest rates, and it's been 65, 75. We're going to have a rate hike. It's now below 50. And the latest consumer price index and PPI, produced prices, very benign, very, very soft. And you cannot see an argument other than oil for the Fed to raise interest rates. It makes no sense. So it's all about oil, and hopefully we'll see the conflict in the Gulf improve again, and the situation will lead to lower oil prices. Lower oil prices will mean lower inflation. Lower inflation means higher gold prices.
It's, certainly a technical correction rather than a prolonged bear market, what we've seen. But the last kind of 4 months or so, just over that, Jeff, have been pretty remarkable. The conflict, the subsequent crisis in the Straits of Hormuz, a shipping crisis in our own neighborhood, ending up pushing gold down.
Yeah, as I say, it is about that one thing.
Yeah.
The relative interest rates. So let's talk about relative interest rates. The relative interest rate for gold typically is 0%. And when you're looking at investing in gold, if you have something that's 0% and you've got your money in dollars and dollars are earning you 4%, well, that's it's quite an attractive argument for the dollar. As I say, and as I say every week, That's not really the case for gold at the moment because there have been developments, particularly with monetary metals, where you can get your 4%. It doesn't have to be in dollars, it can be in gold.
It's not been the natural order of things, has it, though? This crisis, the experience we've all been through, you'd normally expect it to be, very simply, and I don't mean to be crass, kind of rocket fuel for gold in lots of ways. But it's funny, I read something yesterday that a point that an analyst was making, safe haven buying happened early, but the second round effect, inflation, a hawkish Fed, proved stronger. So it's a paradox. And I like this quote. Geopolitics gave gold its record, and then geopolitics took it away.
Yeah, great. I don't believe gold is being driven by geopolitics. It's being driven by relative interest rates and the fact that gold is that safe haven currency that really, you a store of value that will maintain your wealth over a long period of time. Geopolitics can give a spark one way or the other, but they don't really drive the gold price. It's more about economics and interest rates and exchange rates. It's not just geopolitics. Geopolitics are a trigger, but not a cause.
So the Fed held rates in June, unanimous vote. Projections were split. 9 officials see at least one hike before the year end. 8 see no change. 1 sees a cut. The Fed chief, Kevin Walsh, declined to submit his own projection. You point out markets have been pricing, that kind of 50% odds of tightening by September. The Fed meets 28th and 29th of this month. What should we be watching at that meeting then?
Yeah, you look at the narrative that comes after the meeting, and it will be interesting to see where we are geopolitically when that meeting takes place. But I can't see any pressure in the U.S. economy to raise rates. I can't see it. It's only one thing, which is oil. And I'm very, very optimistic that a solution will be found in the Gulf conflict, and oil prices will be lower. Lower oil prices, Tim, I stress, will mean higher gold prices because it will mean zero pressure, upward pressure on interest rates. And it's all about interest rates, honestly. And I'll come back to you talking about the 9 members of the Fed looking for a hike and blah, blah. Actually, at the minutes of the last FOMC meeting, at the end of it said that most, if not all, of the members of the Federal Reserve expected interest rates to be at least the same or lower, not higher. So despite this kind of what's going to happen in the next meeting, at the end of the year, the Fed expects stable to lower interest rates. And I expect stable to higher gold prices.
Well, I'm going to wait and see, reserve judgment. All I do know is that the next meeting coincides with my birthday. So gratefully accepting gold gifts or anything that you want to send through the post to me.
Well, I'll send you my greetings. Advance happy birthday.
Appreciate it. Something I wanted to ask you. Gold makes up what? 27% of global official reserves. I think it's overtaken US Treasuries for the first time. Central banks, I was looking at figures last night, bought 244 tons in the first quarter. It's above their 5-year average. 89% of central banks surveyed expect global official gold reserves to increase over the next 12 months. So the story really is that the traders were selling and the central banks have kept on buying.
Yeah, they have kept on buying. Look, there were reports of some selling by certain central banks because they had a problem caused by oil price is at $120, and so the central banks of those countries had to find a way to pay for the increase in energy costs. But generally speaking, and across the board, we have central banks adding to their reserves, and it comes back to something we've been discussing for a long time, and that is the de-dollarization or dollar diversification, whichever way you want to describe it, i.e., changing some of their dollars into gold. And that movement with central banks has increased over time and is likely to continue doing so. So it would be no surprise to see 30% of world's central bank reserves being held in gold, and for that to grow.
And it really is a lot to do with China. They've really ramped up the buying.
Yeah, absolutely. China, Russia, India, Turkey, who they did sell a bit, but Turkey, you've got a lot of central bank buying in sort of Eastern Europe, Poland, because obviously we forget there is another conflict going on between Russia and Ukraine.
Yeah.
And so those central banks that are nearby to those two countries, they have been buying gold quite heavily over the last couple of years. So I think the narrative remains unchanged. The gold price at the moment remains unchanged, but sometimes you have to say that a period of stability is actually good for the longer term growth and health of any asset class, but particularly gold.
Silver is the wild ride at the moment, trading around the $58 level. Last time I looked, it's down about half from the high in January. Gold silver ratio is what, 69 to 1 at the moment? It's the supply deficit's widening.
You're getting very good at this, mate.
I read stuff because I feel like I should.
No, but you're absolutely right, and
Silver makes gold look tame, doesn't it? What's going on?
Well, it always has done. If we look at options, if you like, is a measure of volatility, the price of options, the interest rate involved in options, and gold's option volatility is twice that of gold, and it has been since I can remember. And one of the reasons for that is that gold is very deep. That silver isn't so deep. Because it's such a cheap price compared to gold. It means that kind of a little bit of money can make a big impact on the price because of that lack of liquidity. So it's always been, and it's my favorite. But silver has more going for it than gold. The demand for gold comes from the jewelry sector and from investors and from central banks. Silver demand comes from across the spectrum. So we have silver, which is really, really needed in the world and has the attributes of a monetary metal, and we've got gold. So the answer is buy both, just not so much. So silver, don't forget, add your numbers up. Make sure you've got what I think is standard now for gold in terms of personal reserves, 15% of your wealth should be in gold. And of that 15%, maybe between 3 and 5% in silver. And if you really want to have a flutter, have a look at platinum and palladium, which with their volatility even makes silver look tame.
I was going to ask you how you weigh gold against silver at the moment, how the two cases differ. So I appreciate that. Let me just ask you, have we got time? We've just about got time for a local perspective. I know you're in the UK at the moment, but you spend a lot of time in Dubai. Of course, you've lived here for some time. It's a city that lives and breathes gold from the souk to bullion vaults. What does a 25% price fall from peak actually do to physical demand here in the UAE? What have we seen?
Well, in our part of the world, if prices go down 25%, it means that the investors and, if you like, the locals can buy 25% more gold, and they will, because in terms of Arabia, in terms of the Indian subcontinent, the peoples of this part of the world believe in gold, and they believe in gold by buying jewelry. And so it really, for me, demand in the UAE, in Dubai's gold souks, is never driven by price. It's driven by demand and cultural reasons, and for celebrations, for birthdays, for weddings. People buy gold.
Yeah.
It's irrelevant. It doesn't matter what the price is. And if it's a lower price, you can buy more gold. If it's a higher price, you buy a bit less gold. But if you like, you spend the same amount of money because you're not buying to see the price go up. You're buying because you believe in gold. And in Dubai, in India, across Southeast Asia, the peoples believe in gold, and that's why once you add central banks believing in gold to people generally, not in Western Europe, to a certain extent, not in the US, but in Asia, 100% people believe in gold, and if they can, they will buy gold always.
Jeff Rhodes is the Managing Director for Business Development for the Middle East and Asia at Monetary Metals, among his many skills. It's always good to talk to you, Jeff. Appreciate you getting up early to join us.
Thanks, Tim.
Good to talk to you. Morning Drive is driving all the way to Sheikh Zayed Road, front row seat for the future of mobility. We're going to be broadcasting from Al Futtaim Volvo's brand new flagship showroom on Sheikh Zayed Road, the largest Volvo showroom in the UAE. That is tomorrow, and you're going to hear lots more about this. Don't miss our exclusive conversations. Catch the full episodes of Morning Drive and Luxury Breaks across our podcast, YouTube channel, and Mira Business FM platforms.
Mira Business FM, Dubai's home of business radio. success. Mira Business FM.
This is the Morning Drive. Tomorrow morning, we're driving to Sheikh Zayed Road for a front row seat for the future of mobility. Going to be broadcasting from Al Futtaim Volvo's brand new flagship showroom on Sheikh Zayed Road. It's the largest Volvo showroom in the UAE. Don't miss exclusive conversations, full episodes on Morning Drive and Luxury Breaks, our automotive podcast. You can find them on the YouTube channel and the Mira Business FM platforms. That is going to happen tomorrow. Right now, David McKenzie is here. He's the MD of Mackenzie Jones. You know what? I had a welcome, by the way. Sorry,
Thank you.
I
Good
try
morning.
yeah, hello. So I always try and kind of introduce you in a particular way. I have a sheet of different superlatives.
You sent me a picture of a film you were watching yesterday, Warhorse.
Oh, I forgot. It came up, and I just thought I'm snapping a pic of that for the Warhorse himself.
Did you know he did that? It was brilliant.
I forgot to tell
Made
you.
me chortle.
David McKenzie is the dog's back wheels, the MD of Mackenzie Jones.
I love those dogs that have those little trolleys on the back. You know, they disable. And there's a place in Thailand where there's literally about 100, and this guy rescues them. Who normally these dogs are put down, and he makes little brackets with wheels on the back, and these guys zoom around everywhere. It's just a joy.
Beautiful thing to see.
I love that. Yeah,
They should do chariot racing of dogs like that. No, I don't mean that in a bad way, but that would be a great thing to watch.
Suddenly went dark.
It sounded darker now that you pointed that out, but I didn't mean it that way. But that would be, the dogs would love it.
They would.
I'm saying treat the dogs fantastically, as you should, as an animal lover. But, little races with the chariots.
Well, I think they do. What he does, he has this gate, and they all line up on the gate, and then they open the door, and they all go absolutely hell for leather down towards the beach. And it's brilliant, but they all get caught up in each other's wheels, and they get flipped over, and some are on their back, and they have to right themselves and stuff. But you could see the look on their faces. It's just sheer joy.
Yeah, absolutely.
I love that.
No, that's a great thing.
Yeah.
It's nothing like seeing an animal in that moment. What the philosophers used to call peak experience. You know that thing where you're doing absolutely nothing, and the sun shines, and you're just in that moment of, this is good.
It doesn't happen that much anymore.
No,
I think we're in a period of, and this is a nice segue.
We're in our twilight.
Well, I think we're in an interesting time now, aren't we? Both in terms of economy, macroeconomics, and in my industry, and recruitment as well.
Well, it's a tough world out there, and that's really what you sent me an article day before yesterday, I think it was, Financial Times article, which kind of spurs the conversation today. So it's hard in the recruitment world. Are we seeing a hiring slowdown? Lots of recruiters suffering. What does it mean for candidates?
Yeah.
How do you feel at the moment? What's your first observation?
How do I feel personally at the moment? It's
Professionally,
I feel we're in a really interesting time now, and I think we've been here before, Tim. We've been here in 2008. We were here during COVID in 2013 as well. So it's another time in life in the UAE. I think globally, the recruitment businesses are going through a really difficult time at the moment. I mean, you look at some of the stats. I mean, Hayes have sold off 6 of their regional offices. Denmark, can't remember all the different ones. Denmark, UAE is going to be one apparently on the radar. Czechoslovakia, Denmark, Hungary, etc., because they just aren't making money out of it. People like Page, who is my old company, I think their profits are down by 90% last year. Manpower made a $67 million loss, which I think globally is not a great thing, because if you look at what's caused this, that means they haven't placed as many people in permanent jobs as they did a couple of years ago, which means it affects job seekers. So if you keep winding back, we've got a really interesting time in the globe now. The macroeconomics is UK is struggling politically from indecisions, from migration issues, from the hangover from Brexit still. America is, well, I don't think we need to go into that, but because it's self-fulfilling that. But I think look at the UAE, we've got a situation with the current problem in the Gulf.
Yeah.
We've got a slowdown in the housing market. People are being made redundant here. But again, the one thing I can say with absolute certainty, that will change. in the UAE.
Okay.
I'm not so sure it's going to change for a long while in Europe at the moment.
Recruiters hit by hiring slowdown in Europe was the FT headline
Yes,
that you sent me. Okay, so essentially recent economic political shifts, UK, Germany, and France are kind of being singled out of, I suppose, leading a European hiring slowdown. So that's kind of the background. The challenges from a number of perspectives. Perspectives.
I think he's struggling with that one.
I seem to be struggling this one. I woke up feeling fine, and it's just gone.
Don't worry, you can reboot with this show.
Yeah, thanks. So I want to kind of look at what it means for us in this region, but let's start here. So you mentioned Hayes there, right? Issuing profit warnings recently, closing 6 locations. How much of that is a true, how much of all of this is a true hiring freeze, and how much is just a return to normal after kind of post-pandemic intensity? Because you had, I mean, it's been a roller coaster ride, let's face it.
I don't know the answers to that. All I can look at is there's been a significantly decrease in what we call permanent hiring.
Yes.
Which is, if you look at those companies like Michael Page, Hayes, predominantly their business is based on permanent hiring. So that in effect is, you get a mandate, you place somebody, you get a fee for it.
Yep.
There's obviously contract hiring on the back of that, and then there's RPO, et cetera, the other facets of recruitment. I think what's happened is after COVID, we had this sort of meteoric response to the COVID climate where everyone started hiring like mad. People went on holidays. It was almost like a liberation. And I think the reality has come into place now where companies got very fat and the economy started to slow down and they didn't make changes. So they just stopped hiring. And I think the big recruitment companies didn't pivot. They didn't look at what they were doing and try to adapt either the numbers of people they've got or what offering they were giving to clients. And there's lots of things like there are smaller businesses coming in that are more specialist rather than generalist.
Yeah.
AI is starting to affect things. We all know that. But also you've got a situation where clients were starting to pay later. So payment delays were coming through. And that's across the whole world at the moment. So all of these things affected these big global recruitment businesses. And I think, to be honest with you, they're too fat.
So fee income is down. So from your perspective, firms are pausing on permanent hires, right? So is that a temporary kind of a wait and see thing by corporations, or is it a signal that companies there's a structural change in how people view permanent staff?
Yeah.
That's what it is.
I think that if we look at the Middle East, we're slightly different to the rest of the world. So let me talk about the Middle East. It's probably the area of my expertise.
Yeah.
I think what's happened is we grew very quickly over the last, let's say, 6 years in reality since COVID. There's never been a slowdown. The property market went up, cost of housing went up, cost of living went up. And I think what companies realized, certainly if you look at the HR area, it's cheaper now to have an HR director based out of Europe covering this region.
Okay.
So what they started to do is start to look at their costs internally and realize they didn't need head offices here. Then there was the added sort of impetus from Saudi Arabia to position your head office in Saudi, regional headquarters. That shifted stuff towards Saudi, which was still booming. And the UAE's been in a situation, I think, for the last probably year or two with the current war, with the current slowdown globally has affected the UAE. And people are starting to lose their jobs because I just don't think companies are expanding as fast anymore. And they're having to look at their staff numbers and go, we're not growing, we're not making enough money, we have to cut our headcount. And that's exactly what's going on at the moment.
Okay, so let's take Hayes as the example.
Yes.
Cutting costs to, obviously, to protect margins. If a global major recruiter is trimming its own headcount, what does that tell us about the confidence of the clients, the big clients, the multinationals that they serve?
It's not good, is it? Let's be honest.
Well, I mean, we need to be clear, I suppose.
You look at the stock market at the moment, and I dabble in the stock market. So if you look at the moment, the tech stocks are going through the roof. But defense stocks, and what I mean by defense stocks, they're people like healthcare companies, airlines, banks, all those things. They're all really low. So if you look at someone like IBM's just had a 22% reduction in its share price yesterday because their profit came out and it was way below what they're expecting. So all of these defense stocks, all these traditional companies are releasing profit warnings and they're not doing as well. What that means is they have to look at where are their expenses. Their expenses are one of many things, manufacturing, but predominantly it's going to be people. And if you're not making as much money, you don't need as many people. It's a very basic, economic equation. So what you're finding now is a lot of these companies are looking at their people. People are doing their job plus one other, so that companies can cut the cost of their businesses.
That's a whole program in and of itself.
Well, and you're seeing this in the Middle East, where we're seeing when somebody leaves, people aren't hiring that replacement. But what you are seeing, and this is what we've seen over the last probably 6 months, these big recruitment companies, and Hayes and Page are good businesses, by the way. They're very strong recruit. They've got very good coverage of the marketplace. They've got very good knowledge. They've got great recruiters. But what they're not often is specialists. So what you're finding now is rather than companies doing mass recruitment, which they used to do over the last 6 years, they're now going, I need an HR director. I need a specialist comp and bens person. I need an FPA analyst. I don't want to go to a big Michael Page or one of those big companies. I'm going to go to a specialist in the region, like Mackenzie Jones. Had to plug that. But it could be anybody who are really good at doing a certain thing. And it's more cost effective. You can often get somebody who will work very hard for you on that basis. So you're finding that companies are going down the specialist route.
What I really enjoyed there most, not just the plug, was just
was a shameless plug, and I do apologise.
No, I enjoyed that. It makes me happy. I expect nothing less. No,
I should do it more, but I don't.
You should.
I feel a bit gauche doing that. But
it was comp and bends that I liked.
You love comp and bends.
I do. I feel like it should be comps and bends, but then you think it's compensation. It wouldn't be compensations, would it? So no, comp and bends.
Comp and bends.
Yeah.
But my point being is that in this region, that specialists are winning over generalists at the moment, and because we're more agile, we're smaller, we're able to get a much better handle on the market. Plus also what's happening in the Middle East, you're finding that the businesses are being shut down, recruitment companies are shutting down here, not because they're not particularly doing well in the Middle East, it's because their global parents are struggling.
Yeah.
So what they're looking at, Hayes is a good example. Hayes did reasonably well here, I assumed, but because their global business is down by about 10%, they're down by 90% of their profit margins at the moment. They've got to look at cutting back. And where can they do it? What they call non-core markets. And the Middle East, unfortunately, is a non-core market.
Yeah. And when you hear economic jitters in the UK or Germany or wherever in Europe, how do I put this? Are we looking at a cooling of the global professional services market?
I think we're looking at a right-sizing. Okay. And when I mean by right-sizing, I think the market is cooling globally anyway because of so many different issues out there. Essentially, it's the macroeconomics are meaning that the recruitment market is not going to be as big this year as it was last year. Just a fact. We can go into all the details, but that's a generalist view. But what we're looking at is these recruitment companies now are having to look at their businesses and go, we're too fat, we're too big, we're too slow moving, we're not agile enough. We need to start looking at how is AI going to impact us? How are we going to offer solutions to clients that don't involve contingency recruitment fees? So, we pivoted our business to an RPO model, which is resource process outsourcing. So essentially what we do is we go into clients and we provide their talent teams for them. We charge you a monthly amount for it, and we save them between 30 and 40% in their recruitment fees.
Right.
Because clients asked us for that. They said, we've got a lot of hiring to do. We can't afford to keep paying contingency recruitment fees. Can you come up with a better offering? We could do that because we're agile, we're nimble. Some of the bigger companies can't do that because they're very invested in their traditional contingency placement model.
So you have to think, don't you, that the the word that we need to be using here is pivot. You've got to be more agile. You have to turn around and be willing to change.
But if you're looking at a company that is, Michael Page is almost $1 billion company, it's a very, very big oil tanker to pivot.
Yeah.
Now, there are smart people there, really smart people. They'll do it, but they haven't done it in the last 5 or 6 years.
It's going to take time.
It's going to take a long time. Yeah, you look at some of the smaller businesses that are going, right, how is AI going to affect our recruitment model? What do we need to do? So if I look at my recruitment business, if I could take a part of my recruitment business away, I take away the acquisition of candidates because AI can do that. But at the moment, some of these big recruitment companies are charging for that whole process. And so we need to go to clients and say, what part of your service do you not want so we can reduce our fees to you? Or we can charge a different way of doing it, which will make you happier as a client because it's more effective and more efficient.
Well, let's look at the influence of AI and this shift from permanent roles to contract-based or more agile hiring, whatever the phrase is.
Yes.
There's a Global Banking and Finance article that I was looking at day before yesterday, and it's reporting a really big shift towards agile or contract-based hiring. So the place to begin here is, why are companies suddenly so afraid to commit to permanent full-time headcount?
Because they don't know what's happening in the marketplace.
It's just uncertain.
There's complete uncertainty.
Right.
Look at, if when we saw each other a month ago, resumed the issues we're finding in the Straits of Hormuz at the moment.
Yeah.
We didn't know that. So if you're a company planning your budget for a year and you're saying, right, I'm going to manufacture 40,000 bottles of fizzy water coming from Saudi, and you plan that going into your supermarket and you plan the whole supply chain, and suddenly this happens again, your ship is stuck in the Straits of Hormuz for the next 6 months. So there's so much uncertainty in the marketplace at the moment that it's really difficult for companies to plan properly. So they have to plan by being cautious, and that means don't hire full-time staff, hire contractors or hire interim people that can do a job now, but at any one point you can cut that person off.
So that makes sense. So geopolitical tension, the ongoing conflict, that's one of the main reasons that lots of candidates are in limbo.
They are,
right?
yeah, absolutely.
Unfortunately. So there's a very real effect on people to be taken into consideration. But the question from that is, how does a conflict in the region translate into a hiring freeze in a corporate office thousands of miles away? There's always...
Well, because this conflict in the region is not just affecting us, it's affecting let me give you I was in Australia in January when the war started.
I remember.
Yeah, I think we messaged each other, which is a great place to be stranded, but I wanted to be back at home, and I did eventually get back. Yeah. But when I went through the petrol station in Sydney, it was, let's put in dirham terms, it was like 2 dirhams for super. The conflict started. Within 2 weeks, that was up to 4 to 6 dirhams. It doubled in price almost immediately. So what was a very much a regional conflict escalated into a global issue, which then looked at companies that produced material that either came through the Gulf or was affected by the supply chain, which meant they had to look at their businesses on a global basis and go, look, this is going to affect us. Because we forget now we're such a globalized economy that, do you remember when COVID happened? Wuhan, it was Wuhan, nobody had ever heard of Wuhan before.
Everybody knows Wuhan now.
Exactly. So as soon as that happened, everyone was going, oh, it's just a flu. Within 6 months, the global economy, in effect, shut down.
Yeah.
So what we're experiencing now is being multiplied by however many times into a global situation where people are not able to commit to hiring people because they don't know what's going on with their business at the moment.
Just as an aside, you bring up COVID, and I look back now, my kind of view of that is, because I got sick just as COVID was being, was starting to happen. A different thing, which I've recovered from and is fine. But I look back now and I think, did that really happen? Did all that mask stuff go on? Did we have to, text the police to be able to go to the shop?
Well, I saw an article on Sky the other day. Yeah. The UK is investigating a £10 billion
the PPE thing.
PPE scandal that's going on. Yeah. So I think now, would this happen again? My honest answer is I don't think the economies globally would shut down for something that is admittedly very dangerous to certain segments of our marketplace.
Yeah.
So if you look at the conflict now, our conflict is a regional one. It's about, it's in the Gulf. We're affected by it. But if you talk to people in the UK, they don't perceive themselves to be affected to it. But when they go out and buy their toothpaste, which is made in wherever, let's say Indonesia, how does that get to us? It's through global shipping routes. Yeah. A lot of the global ships are stuck in the Gulf of Hormuz. Something like 40% of the global shipping fleet is stuck there. So you can't transport stuff. So transport costs goes up. You know what it happens.
The knock-on effect. No, I get that. I still just look back at COVID and think,
You've still got this.
I'm still there in that tunnel at the moment. It was a remarkable time. Let's talk about AI a little bit.
Yes.
Is AI actually replacing the need for new hires, or is it just changing the type of people that companies are willing to have?
I think it's the latter probably. It's not taking away the need to hire people. What AI will do from a recruitment standpoint, AI will make companies more effective at repetitive tasks.
The AI efficiency shift, as it's termed.
Love that.
That's a good phrase.
For a recruitment company, what does that mean to us? Because when Monster.com came out years ago, they once did a very famous advert. I worked for them, by the way. And it said...
I hadn't heard that before.
Yeah. Oh, yeah, I was there. Yeah, anyway. But they were they were a job site and they built a whole database. And one of their adverts was, "Welcome to the death of the recruitment industry." And it was a brilliant, aggressive thing. Now, everyone went, "Oh, my goodness me, they're going to..." And then LinkedIn came along and everyone went, "Oh, that's going to take it." It hasn't. So what recruitment companies will have to do and will have to pivot, and these big ones haven't done this yet, they have to pivot and say, how will AI affect their business model? So what it will do, it won't replace recruiters, because if you're replacing someone like me, mine's about the personal connections I have in this market and my knowledge. Mm-hmm. What it will do is take away the bit where when I get a new job, I have to go and find candidates, the acquisition piece. AI can do that very, very easily.
Okay.
At every level, by the way. So if anybody says just for junior, it's not. It's for senior as well.
Yeah.
What that will mean is then I will then move up into a different part of my recruitment role where I'm much more spent time with clients and with candidates doing assessment and selection. So it makes us more professional as an industry. But what it'll mean, if you look at the big companies like Page that have got 900,000 people, whatever, they probably only need about 500 now.
Well, how far away is, when it comes to, sitting with clients and assessing, how far away is AI from getting really good at assessing things like cultural fit or, that kind of thing?
I saw a
encroaching into your.
I think it's closer than we think. I saw a chap from McKinsey's the other day who's done this new AI screening tool for recruitment companies, which means you can acquire candidates, assess them, shortlist them. You take away all of that process, and I'm like, shirt to me, it was amazing.
Really?
I suddenly saw the future of recruitment is going to happen a lot quicker than we think. Now, what that will mean is that people like me and some of my consultants will become much more functional experts. This is what the big recruitment companies aren't. So then clients will call me if they want a comp and bends person, because that's the market I work in. They won't call me for a generalist sales role because I don't do that. So this is, as a recruiter, this is where you will really become the expert of what you do. And that will all be your knowledge about the people in the marketplace, your long-term connections with the people, your understanding of cultural relevance. What it will also mean to candidates is that you have to spend more of your time working with specialists in the recruitment industry, because they will be the ones getting you the jobs.
Just thinking, a thought bubbling through my brain. The one thing about human beings is that we're pretty unpredictable, right? You're never really sure what people are going to do.
No, and actually, people change their mind. You could have a bad day and you'll change your mind. And we have that with hiring. The biggest issue we have now with hiring is that clients won't make decisions.
Yeah, okay.
Do you know why?
At this point, right now.
Because they always think there's a better one around the corner.
So don't we all do that?
I said this to my missus, right? I've been married for 30 years, right? And my wife, it was a sliding door moment. I was going to an army ball and I thought, I'm not going to bother going to that ball because I'm tired, I can't be bothered. And my mate turned up because he hadn't got my SMS. It wasn't a WhatsApp, it was an SMS in those days. And he goes, I didn't see you cancel. I said, I'll come anyway. And I met my wife.
Imagine.
Sliding doors. Yeah. So we're in a situation now where clients are constantly taking time to hire. Now, often for the right reasons, because They're unsure of whether they need that person at this current time. But the really smart ones now are hiring for the future, because we know next year in the UAE, the market will turn. I guarantee this, by the way. And I'll come back in January. I know it's a big ballsy thing, this, but
It is.
I've been here 20 odd years. So have you. I know how this market works. And I almost guarantee we're going to see January and February as being good months for hiring of staff into the GCC.
Okay, let's just mark this moment with
and let me
little
explain
pause.
why. This is not a crystal ball moment.
No.
If we look at it over the last probably 6 to 8 months, people have been holding off on hiring because the regional conflict. The regional conflict is not going to go away. So the new norm is what we have now. So clients are their bellwether for what normalcy is now. Whatever happens, these companies have to make money. The government is spending massively on infrastructure. We've still got companies hiring people here. And I think what will happen is companies over the next, I reckon Q4 and Q1 next year, people will go, right, we've got to get our companies back on track. We need really good people. The good companies are hiring people now for that period of time.
Okay.
The smart ones.
It makes a lot of sense, actually. No, you can see a scramble, can't you, towards the end of the year?
You know what it's like. It'll be next year, suddenly the market will turn. And you know how quickly the Dubai market turns. It'll literally be like that. And if you're not geared up for it and you're not ready, and this is a ray of hope for candidates, you need to be ready now, because we're starting to go into that period of time. And that's not me being an optimist, it's me being a realist. I'm banking on this, by the way.
No, it makes a lot of sense. You know what will happen is one day in November, you'll be driving to work and it will be 10 minutes to get there. The next day, it will be 45 minutes. And where did these cars come from?
Exactly.
It literally turns like that. The thing about all of this, and what we need to keep in mind, front and center, I think, is this is about people. This is about people's lives. This is about people's futures and careers, right? So let's go back to the temporary versus permanent thing for a moment, that kind of shift. What does all that mean for your average professional in terms of job security and long-term, career planning, the whole path?
Well, I think the job for life is gone. It's gone years ago.
Yeah.
I think people are looking at what we call the gig economy, which was talked about a long time ago. But the gig economy is about, freelancing. So you may have 4 jobs, but they will pay your total of your salary, which you would have normally got if you'd had a permanent job. The bit you have to do is you have to adapt to that sometimes you'll have a great month, other times you'll have a bad month. So if we look at in the UK, the amount of youngsters, and I say youngsters, my kids' age, 25 to 28, they're not buying properties anymore. They're renting. And the reason being is a lot of them have this philosophy now that their jobs change every 2 years. So it's going to change how the housing market works in the UK. Here, it's not commonplace to do freelance or to do temporary work. There's a number of reasons around the licensing.
Well, it's a more complex situation.
Exactly. It'll change.
Yeah.
I think you'll see the change in the next 5 years.
I mean, it has changed to an extent already. There's a great deal been done.
Yeah,
but more needs to happen.
There's the freelance visas. There's the various visas.
There's all kinds of side hustle licenses that you can get if you're on a spouse's visa, for example. There's all kinds of things that you can do, but it's coming.
But I think what people have to realise now is that you have to look constantly for where your next move will be within your existing company or outside. Always expect the unpredictability of this market. And I think what that makes you is a bit sharper. You don't have to worry about it, but you have to be sharper. And that's why we talked about this years ago about you should always be looking for another job. Passively.
Yeah, this is you've always said this.
Yeah, because you don't know what may happen tomorrow.
Yeah.
Your company might go, we're shutting down. Hayes, shutting down in the UAE. I don't know if that's a fact at the moment, but that's the rumour that's going to happen. So all their consultants are going, well, what are we going to do? So what they should be doing is reaching out to all the recruitment companies.
But you should be, your thing was always, you should be doing that no matter what's going on. That should just be part of your natural kind of thought process, your career process.
I don't.
You're in a slightly different position.
But everyone else who's got a job now should always have, right, what's my LinkedIn look like? what are my connections? Am I reaching out to people, especially yours, Tim? Well, I talked to another presenter actually, and she said, I don't have my LinkedIn up today. I said, well, what happens if you leave your job tomorrow? Oh, well, I won't, but you might. Your industry is notoriously fickle. And I say this to every person, whether you're a chief exec in a company or a junior, always look that things might turn very quickly.
Poor presenter's probably at home going,
you know her. You know her. No. It's just what I don't want to. It's not a scare tactic. It's just.
It's a good reminder, but
you buy life insurance.
It's slightly frightening.
Well, you buy life insurance when you go away on holiday. Why? Because what might happen? Right. It's pretty unlikely if you're going to Spain, unless you get run over by a bull or something, but which could happen if you're running with the bulls. But I did La Tomatina one. That's another discussion anyway.
Oh, I want to talk about that.
Fantastic.
That looks fantastic.
It's awesome. Anyway, but you buy life insurance, and I always say to people, but then you look at your career and you just sit there and you go, well, I've got a job, so I'm happy. But that could change. You could change. And I think you always got to be proactive.
No, that makes a lot of sense, actually. So if you're sitting back on your laurels, things tend to catch up, don't they?
Yeah, absolutely.
So, Tomatina, tell me about that.
So La Tomatina it's a festival in Buñol, near Valencia in Spain, and it basically was, I can't remember what it was. I think it was during the Nazi occupation. The villagers, as a means of protest, when the Nazis drove, they used to, rather than give the produce to the Nazis, they threw all the tomatoes at the wagons and stuff. I'm assuming it's that. I can't remember what the real story is. Brilliant. Anyway, so what happens? It's in Buñol, in this little village, and it's got, all the buildings are quite high, and they roll plastic sheets down the side of the building. Everyone lines up, and the mayor comes out, does a quick prayer, etc. And then these trucks drive through with 100 tons of tomatoes, like plum tomatoes, and they stop, and there's a moment's silence, and I can't remember. I think the silence was for all the fallen in the war. And then it's just the trucks tip up, and all these tomatoes, and it gets into a huge fight. I did it about 15 years ago, and it wasn't that popular, but it was epic. There were priests there in their gowns throwing tomatoes. There was little school kids. There were nuns. It was so cool.
See, for anybody listening to this, and loads of people have heard of it, and if you haven't heard of it, then it is a real thing. It's a tomato fight, basically, isn't it?
Huge, and literally, you get the streets fill up with tomatoes, and people are swimming through these tomatoes.
It's a remarkable thing to see. But you know what? If you're thinking, oh, it's really childish. No, what's the point of doing that? I mean, there's the remembrance aspect, which is one side of it. Yeah. But there's also, I would argue, hold on to the child in you, because that just sounds like fun.
I've done loads of things. Like I've been to the Ice Hotel when my youngest was 8 weeks old, and I went bobsleighing. I mean, I think you've got to do these things, and I think if you pivot this back to your career, we spend an awful lot of time working.
Yeah.
And I think you almost have to have things outside of work that make you a better worker, because it makes your interest levels higher. And I think it makes your energy levels higher. I talked to you about going riding this morning. And I think we're in it, certainly in the Middle East, where we're a real full-on culture here. Everything's go here. Yeah. Sometimes you need to step away and do some really weird and interesting things.
No, I agree with you. I do find it a little bit weird that you get up at 4:30, 4:45, and cycle for an hour and a half. I respect it. Don't get me wrong.
I did it this morning.
I could not do it.
I get up at 5. I go to bed at 9:30 because I work really hard during the day, and by the time I get home, I'm a broken man. Yeah. So I exercise in the morning, and I get up really early, partly because it's hot, but partly because it re-energizes me. So I did an hour and a half today. Tomorrow I'm doing a mall run. I love Dubai. Here's what's brilliant about Dubai, okay?
The mallathon thing.
Honestly, that's superb. I mean, who woke up one day and went, we've got these malls, it's really hot outside, why don't we open them? I mean, I'm pretty sure His Highness and his governance crew went, why don't we do this to keep our people happy? And spot on. Thank you very much. It's an amazing event, and you can run between 6 and 10 in any mall. So we've done, me and Rohit, my mate, we've done Dubai Hills Mall, we've done Dubai Mall, we've done Murdif, we've done MOE, we're going to Ras Al Khaimah as well. We're running around all the malls in the UAE. Can't wait. It's a genius idea.
I saw the Maulathon adverts a couple of months ago, and I'm looking at it, and I'm thinking, Malathon? What is? And I'm trying to work it
Maulathon.
out, and it annoyed me a bit because little grammatical things get on my nerves. When people don't use grammar when they text me, I don't respond. I'm like, no, I'm not talking to you. And then I got it, and now I can't get past Maulathon. It's a word. It's become a thing.
But you know what? It's not just runners. There's mums walking their kids.
Exactly. Yeah,
there's little kids running around and stuff. It's real. It's a real. This is what I love about the UAE. We've got a problem because it's really hot at the moment, and people want to exercise. How do we get them to exercise? Let's open our malls early. We've got real estate. And by the way, they don't do this as just opening. You can run. There's water bottles. They've mapped it all out. There's little arrows where to go to. They're sectioned off. There are guards stopping people walking across. It's so well done. Honestly, it's just that's what I love about Dubai. You know, there's a problem. We'll give you a solution, but it's not just a solution. It's an amazing solution.
Yeah. Okay, we were talking about how tough it is in the recruitment world.
I'm sorry, we digress hugely. Yes.
Are we seeing a hiring slowdown? Let me bring something else in here. I've been reading about this, and this is a slightly different way of looking at it. The Association of Chartered Certified Accountants, ACCA, 2026 Europe Recruitment Outlook. And lots of this comes as Europe is really struggling. What does that mean for us here? But anyway, this outlook, calm descends on recruitment. Okay. It highlights the transition from the volatile high inflation environment of previous years to a more stable selective recruitment landscape in 2026, right? ACCA describes the current market as a shift from breakneck growth to calm. Is the calm, I ask you, David McKenzie, just them being polite for a stagnant market?
A bit.
It is a bit, isn't it?
It is a bit.
Yeah,
there is some, if we look at the UAE, we were in a situation where the housing market was going ballistic. The cost of living was really high. We had an unprecedented amount of people arriving in Dubai. I think July last year, 17,000 people arrived in Dubai. A lot of those without jobs. So we had a situation where there was oversupply of people. It was very expensive to live here. Schooling was going up, yet people's salaries weren't going up. So I think what happened, the market righted itself, and it was going to right itself whether we had the war or not. We talked about this. It was naturally going to start to calm down, which meant companies looked at their people, looked at their hiring processes, and people had to be realistic about their salaries. So salaries in real terms have actually gone down.
But there's been a real cooling off. But then you've got so many. There were double-digit jumps.
I know,
and that's just not sustainable. So 2.5%, 5%, whatever it is,
too much.
Yeah,
and you got to remember, Europe grows steadily every year, but it's like 1 or 2% at max. We grow. Anyway, I think last year was 8% or so. It was massive growth. No other country does it in the world, I don't think, on a regular basis. So at some point, we had to calm the market down. I think it's better for companies, it's better for people living here, and it's better for the environment here as well, because we've got a huge amount of housing stock coming online soon, which means by default that rents will come down, prices will come down, people can afford more, and I suspect inflation will go down.
Okay, so if is hiring more, is it becoming more intentional? Is that the right way to phrase it?
Yeah, it's a good way to put it.
Do you think?
I think people are taking more time to make better decisions.
Okay, well, because we brought in ACCA accountants here, let's talk about finance professionals for a moment. Because what kinds of traits? I mean, the finance professionals clearly. Much sought after, great demand, right?
Yes.
So what kind of traits are employers looking for finance professionals at the moment that maybe they weren't looking for a couple of years ago when everything's going, great guns?
Exactly. How can you look at our business from a financial perspective and either make us leaner, more productive, or more profitable?
Okay.
Those three things only.
Right.
You're not just managing a P&L now. You're looking at that P&L and going, how can we streamline this or make it more efficient or make it more profitable?
And also a broader skill set, so ESG or financial planning and analysis or data literacy, because it strikes me that if you don't have those, your chances are far slimmer.
There's a real adage coming out. It's about commercially aware candidates.
Right.
And these aren't people that just do their job in isolation of an organization. So you used to have PR and events people. They did it just to keep the event going. What they're saying now is, if you're an events person, what's your ROI, return on investment?
Right.
How are you affecting the bottom line of your company?
Right. Okay.
Same with HR. HR typically were a cost center for a long time. But you look at them now, I always describe HR as the health and wealth of the company. It makes the company function better, which makes it make more money. What you're finding now when we're recruiting HR people, that we often get clients asking us, how has this candidate from an HR perspective affected the bottom line of the business that they're currently in?
How do you do that?
It's very difficult. Well, you can look at retention of staff.
Okay.
You can look at hiring of better people that affected the top line in whatever area. Looking at
firing.
Unfortunately.
Unfortunately, that's what
But
it
looking
is.
at streamlining, how can you... I use a better word there.
Streamlining.
Well, you can look at streamlining your organization. You've got 10 people in your marketing department, they're producing X. Can you have 8 that produce the same amount? So unfortunately, looking at efficiencies of scale, those sorts of things. But it's also looking at, right, we've got a healthcare scheme that's cost us $1 million a year or $1 million dirhams per year. Will you come on board? Can you bring that down? Can you make the benefits better but cost cheaper? It's all these things that HR have got a really good ability to affect the very costs that the business has that makes it expensive to run.
Okay. So if you're one of these candidates that has this broad range of skill sets, you can really identify a time when there was real ROI for a company that you work for, you're a financial professional, and you are an FP&A kind of person. Candidates view things like hybrid working, well-being, those kinds of benefits and perks in jobs.
They don't cost anything.
They're kind of baseline expectations, I think. If a company can't provide those, are you setting yourself back? Are you kind of disqualifying yourself from getting those top tier people?
Absolutely.
You
are, but also candidates are disqualifying themselves from some companies that aren't offering that.
You've caught my
sorry
thing
about
this
that.
morning. I don't know what's going on.
But I think we've seen a bit of a trend now where there used to be huge amounts of flexibility in the workplace. It's going the other way at the moment. We're seeing companies saying we want people back in the office now.
Yeah. Okay.
I fundamentally disagree with that. Because I think
you don't want people back in the office.
No, I think we work 3 days a week and 2 days a week at home. I think that's a very nice equilibrium for our employees, and our employees seem happy. And when we hire people, you're finding less and less people are saying, "Well, I'll only come to you if you're super flexible," because they realise that some companies aren't being flexible, but they're really good. So they go, "Actually, I'd still join you." So you have to be careful on both sides. Companies have to be more adaptable to the employee, because if you want to hire a good person, example, we have lots of working mums. Some of them have to go and pick their kids up on Friday. These schools, they don't even work, I don't think. They drop them off at 8 and they have to pick them up at 12. I mean, that's like 4 hours. I don't know how that works.
My wife just punched the speaker.
Your wife's a teacher, isn't she?
She is, yeah.
But you know what I mean?
No, I do.
So there's frustrations there where if you're an employee, if you're a mum, then you often have to go and pick your kids up at like 12 now or 2 o'clock.
Or if you're a dad.
Sorry, forgive me. Yeah, if you're a dad as well.
Yeah.
So typically you have to be more flexible with those types of people. And if you're not, then you won't attract them. But likewise, as an employee, you need to be as attractive as possible in this market. And sometimes, not having flexibility may be something you give up to get the best job in the world.
Yeah. We've got 2 minutes. I've got 5 or 6 things that I wanted to ask you. And I need to pick a couple of things. All right. We've talked about stagnation in Europe. That's really where this discussion comes from, what it means for here. Cautious consolidation was a phrase that jumped out.
Yeah,
that's a good phrase.
That's a really good phrase. Yeah.
How different is the reality here on the ground in Dubai, in the UAE, in the region for the average hiring manager, given this warning sign, if you like, from Europe?
From a hiring manager or from a candidate?
From a hiring manager.
I think a hiring manager needs to look at, if I think about my conversations with my clients at the moment, they're going, we have these roles coming up, but we're being cautious about timescales on this. So what we want you to do is go and see what's in the marketplace and give me an idea what's out there, what the talent is.
Okay.
So they're almost like they're going out and they're dipping their toe in the water. Whereas I think a year ago it would have been, I need these 3 people, I need them next week. Can you go out and find them for me?
Okay. Same question, but for candidates.
Yeah, candidates, look, I really feel for candidates, and I speak to them every day. It's a really difficult market, whether you're in a job or out of a job at the moment, because there's a sense of nothing's really moving. So my view on this is don't focus on that bit. Focus on what you can do, what you can affect. So engage with recruiters, specialists, not generalists.
Right.
Engage with clients you want to go and work for. Start writing blogs. Start being out there. Start becoming not an influencer, but somebody who is recognized in your particular industry as somebody that understands exactly what they do and how you can add value to companies. So if you're a comp and bends person, because I know you love comp and bends.
Oh, I tell you.
What if what reports what white papers can you put on LinkedIn? It talks about the market currently. How are you utilizing your actuarial skills to look at salaries in this marketplace? Share your thoughts on those things. I mean, I don't know those markets particularly well, but you know what I mean? It's you need to suddenly talk about what you're good at and what the market's doing, and share that with your network of people.
No, that makes a lot of sense. I mean, but I see a lot of LinkedIn stuff, and
A lot of rubbish, don't you? Yeah.
there is so much where you think that's just not relevant to me, and I can't see how that's relevant really to anybody.
Do you know what I saw the other day? It's one of my competitors. It showed a video of them all dancing in their office, and I'm like, it's great fun, but what was the message for? And there was nothing for candidates, nothing for clients. Just like, we're doing really well, we're dancing in the office. And I'm like, is that what LinkedIn's got to now? And I do think that we're missing that community that LinkedIn was built on, about sharing knowledge, guidance, and advice. And I think that was great. It was very funny, but I didn't see any value in it.
It's an Instagram post, not
that's
LinkedIn
what I mean.
post.
And I see a lot of people sharing, I've come to work with my dog today and it's great. And that's a very personal thing. It's great to see that. But my view is, why not share about what you're doing in your role and how you're developing a certain piece in your market. So I saw a really good article from an MD from a recruitment company saying, if I was a candidate in this market, I'd be terrified. That was the header. And then he put down below, but take a beat, rather than worry about what could happen, here's what you can do to make things happen. And he gave a list of what you should do as a candidate in this current market. It was a really good article.
Nice piece of clickbait. And then, but the thing is to be serious, isn't it? To instead of just talking loud, to actually say something. I'm paraphrasing James Brown, but that's
I see so many.
It's a lot of that.
I see so many articles, people saying like, this market's not about engagement. It's about interaction with people, and they're saying nothing. Give people advice, give people guidance, talk about what they can do, or talk about what your view is, what's happening in this marketplace.
Yeah.
We need to give people hope. And I think, and I must leave on this because I know we've only got a few seconds left.
Minus 4 minutes.
Yeah. The reality is, this is a moment in time. We've all been here and we've all come out of it. We are going to come out of it.
It's good news. David McKenzie is, you're going to love this. David McKenzie is the Fritz the Cat of Mackenzie Jones.
Wasn't that World War II, Fritz the Cat?
It's a cartoon character
it was.
From many years ago.
Yeah, it was, yeah.
But Fritz bossed it.
He did, yeah, he was.
Yeah, so there you go.
Yeah, thank you.
Good to see you.
And
Appreciate
yourself.
you being here.
Thank you.
Don't forget to like and subscribe to Mira Business FM.
Mira Business FM, Dubai's home of business radio. Business FM, Dubai's home of business radio.
It's the morning drive. Luxury Breaks is next. A day early, actually. So we are halfway through 2026. New BMI research is out on the automotive sector in the MENA region. And it's warning of what they call a Gulf drag on auto sales. Although I would observe anybody walking around downtown Dubai or the marina would probably disagree. But that's the reality. As ever, Jacek Ziemek from X Motors is here to talk about why the supercar market might be the ultimate hedge against economic bad
starting
news.
from this report, I think it's just...
It's different.
No. There are a lot of data in the report, okay?
There is, yeah.
But the final conclusion is the difference is 2.5%.
No,
So we are in the middle of holiday. So even this kind of report is a significant report.
well, it is, you see. Look, it's a 3.9% decline in vehicle sales across the region this year. Behind that number there's the divergence factor. So some markets contracting, some markets doing really well. There's lots of interesting things to talk about. And I talked to the head of autos and research at the BMI, Anna Marie Baston, yesterday, and I wanted to talk to you about it. So you're not surprised. I mean, the thing is for you, you work in the luxury segment of the auto market.
I don't think
right?
so. It will affect luxury.
Well, it's very different. This is mass market, the mass market auto sector.
Yeah,
they're
keeping in
talking
mind
about.
different thing. Ordering supercar, you're ordering them a year or two or even 5 years ahead.
Yeah,
okay?
sure.
So what you see right now was ordered a couple of years ago.
Yeah.
So even sometimes the sales are not shown by the manufacturers. So it's not so. It's not comparable. We can talk about the Toyota and Tesla, but not about a Ferrari or Lamborghini. It doesn't matter.
The big data, the
we
macro
can say
data.
we can say even in the bad times, the luxury cars have better sales.
Yeah. The macro data says, right, that the market is contracting. But supercar culture, it seems to me, and you're going to back this up, I think, it feels like supercar culture is sort of bulletproof. So if the mass market slows down, it doesn't reach the showrooms. Like your showroom selling the Ferraris.
I don't think so.
It's
We
not
will face
something you feel.
different issues. We will have issues with shipping, logistics.
Sure.
We will have higher prices from the airlines because we are transporting the vehicles by the air.
Yeah, okay.
So it's a different kind of issue.
It's a different kind of pain, isn't it, I
Yeah.
suppose? I mean, let me ask you about now, right? At the moment, it's tough at the moment. This is an uncertain time for most of us. We're all experiencing it in some way. Supply chains disrupted, etc.
And I think the country is hardly working to sort it out.
Well, with what's going on, who knows what's going on behind the scenes? But
No. The solution which will sort it out for good, I think.
we could speculate on that.
Yeah.
But one thing I know is that if the people I talk to, friends of mine, people are watching their money a little bit more carefully. People aren't sure what's going to happen, worried about jobs, etc. And that's been a thing. And I wanted to ask you, what has the last kind of just over 4 months been like for you at X Motors? What's it been like in your trade?
Surprisingly good.
So it really has bucked the trend. It's not been a thing.
No. That's the different story.
You just haven't noticed.
We estimate sometimes the customers. So if someone is asking for the Bugatti, we think it has to be at least a level like 1 billion, okay, worth. So to buy it cannot affect your life or financing or anything else buying Bugatti. If you're buying getting a loan for such a car,
yeah, that's kind of a different thing. No, I get that.
The different problem is how to insure the car like this. Because we had an issue a couple of months ago, the Bugatti, the insurance asked us about the valid racing license of the customer. Otherwise, they will reject the application for insurance.
Really?
Yeah.
Did the customer have a valid
No,
racing license?
no,
just
no,
one of
no,
them.
no. But it's sometimes ridiculous.
It seems a bit over the top, I've got to say.
I told him that maybe we should call Lloyd. They are insuring the vessels.
You might have got a better rate, actually, but
Yeah.
there you are. So the supercar market operates on a different planet.
See, yes, and also, like you said, the report says 2.5% decline in UAE.
In the UAE, yes.
Yeah, let's say it will
3%,
affect the
3.9 in the region.
luxury segment by 0.1%. So,
Yeah, negligible,
Yeah.
I suppose. Have you seen any difference? Have you? Because one of the things that we're aware of at the moment, the UAE has overtaken Saudi Arabia as the top-ranked market in the region for auto sales. That's one of the things in the report, and less of a decline here than other markets. Are you seeing, for example, high net worth buyers moving their car collections to Dubai if it is a better market? Is there any sign of any change in any way?
I don't think so.
No?
I don't think so.
No difference really in the last 4 months.
We expect all of us, it's not my core business or even my business at all, but we expected to have a decline in the real estate. It's not happening as we expected, right?
No, there are so many anomalies at the moment. It's such an odd
Okay,
time.
we have sometimes a calls from the customers from Europe. They're asking us, okay, give us 50% discount. Sorry, because you have a problem. No, we don't.
People are always going to try.
Yeah.
You kind of expect that. So supercar numbers holding steady. Have you? I mean, I
In
don't
my
know
opinion,
what you can tell me.
yes. Excuse me.
I don't want to ask you for exact numbers, but in terms of projections last year with what's happened this
We
year,
don't
are things
expect.
matching?
And keep in your mind, the report says it should be equal in a third or fourth quarter of 26, and everything will change in 2027. So I think it's like I said before, we're in the middle of holiday, so they had to find something to get attention from the.
So it's not even buyers looking to say shift towards more prudent sort of decisions, pre-exotic exotic cars, more, making a more investment style decision rather than the more obvious collector cars that you sell. Has there been no behavioral change? Any specific changes?
We have also a lot of inquiries from Europe for the old cars.
Okay.
It's not our core business, which sometimes we can help, but finding some particular model, like someone asked me last time about the 1970 Mercedes or something like this. Sorry, I cannot help.
Right. Okay.
Yeah, but
you've seen some inquiries from Europe, though.
Yeah.
Okay. Well, that's good for the business going forward. People are recognizing.
I think there are cars like that sitting in garages in Dubai and Abu Dhabi, but nobody thinks about to sell them.
Those are hard things to part with,
Yeah.
aren't they? Yeah. What about in terms of logistics? I mean, the report warns that the whole Gulf.
The prices are higher. That's all.
Well, we're dependent on shipping. The prices are higher at the moment. But when you've got a custom hypercar, right, delayed because of a bottleneck, a logistics bottleneck, how do clients?
It's not
react?
happening if we're talking about.
You're just doing everything by
air transportation.
So that's not something that's affected
No.
you? And would it be
We
standard?
are able, for example, if someone will call us and I want this Bugatti, let's say, I want to have it within 48 hours in Frankfurt. No problem. So I'm calling the Emirates. Tomorrow the flight will take the vehicle to Frankfurt.
It really is different levels.
I think we will do it faster than you make a payment.
Yeah, I suppose that's the demand of your customers. I mean, cars are luxury goods, particularly the cars that you deal with, but they're also logistics goods. So inventory-wise, do you have more cars here, like listed here? Because
In our case, it's a slightly different situation because we are preparing finally to open the real showroom, not this one which we have still right now.
Right.
So we are preparing we ordered the cars. we will be bringing them here within the next 2-3 months. So it's important, but I think we're pushing the airlines to give us a regular rates like it was before. It's not so easy, but still, comparing to the local offers, we're getting the best one in the world right now.
It makes a difference to your margin, doesn't it? Obviously.
I don't think so. If we're talking about, let's say, the value of the vehicle, like 300,000 euro, right?
Mm-hmm.
And the shipping is 10,000, it doesn't matter.
Wow, it would matter to me.
Of course, for us, it's important, okay?
Yeah.
But you're selling the package.
Yeah, okay. So it really is that the customers that you have, it is just, no, that's
And
the
the
car I want, and I'm
300,000
gonna
euro is
pay for
an
that.
example of the entry point.
Yeah, okay. Yeah, I'm coming at this from a different financial perspective.
Yeah.
This is a different level, maybe.
If we're talking about a 2 million euro, who cares about the 10,000 euro, right?
Yeah, that's a good point. That's the conversation done, really.
I will give you an example. We were asking Bugatti in Chiron. You have this kind of trim outside along the car in the C shape.
Okay.
And I asked them, guys, maybe we will need it. I'm not sure. Because one of the cars has a small scratch and I want to repair it. I want to have it brand new.
Mm-hmm.
It's not easy, but we can arrange it within a month, 150,000 dirham for a small trim. So it gives you the idea how expensive are those toys.
Yeah, it really does. 150,000 dirhams is that's a pretty nice car.
Yeah.
Let's face it. One of the things in the report, I wanted to ask you this: the manufacturing landscape, and this is quite an interesting point. I think in North Africa, Morocco, and Egypt is starting to heat up. You're seeing cars made there, right? So, do you see a future where your showroom may have cars that come from regional lines or specific lines, or is it always going to be made in Europe, or with you, made in Italy?
There is also one thing.
There are some
There is one issue with the cars imported from Europe. The European regulations, safety regulations, are slightly different than GCC. Like we talked about a couple of weeks ago. You have a GCC with no issues, and you have a European spec, the car, which is controlling the speed mentioned on the signs, okay, and slowing down to the speed, or awareing you that you're crossing the limit, something like this. I've heard that from 2030, the European Union will push you to keep the limit, so you cannot interfere, you cannot turn it off.
Okay.
The car will not only inform you that you're crossing the limit, it will not allow you to cross the limit.
Yeah.
So,
but that's a hurdle that you come against. That can be adapted.
yes and no. Yes, if the car is sometimes some particular time already on the market and you have a proper software, yes. If the car is brand new and the manufacturer just change the coding,
right,
and is encrypted, so
okay,
and you can lose the warranty in this moment. Tricky.
But at this level, cars are tailored to the buyer in a particular location.
No. I'm not talking about just a special edition of the cars that the one-of-one Koenigsegg, but I'm talking about let's say the G-Class or the luxury cars, the premium cars, which we are selling as well. And that sometimes there is a problem. It's annoying. It's not a problem. It doesn't mean that the car will not pass the technical inspection here, but it makes you angry when
it's a frustration, isn't it?
Yeah, something like this.
Yeah, okay. Final question on this for you. Have you seen anything in terms of demand when it comes to who buyers are. People buying supercars or hypercars, are they different to buyers in previous times? Are they younger?
No, I think it's a.
Are they looking for
because
different performance?
We're going back to the same point.
Yeah.
To buy a supercar should not be any kind of financial effort for you. Okay, it's like to going to the restaurant. Today it will be, let's say, the pizza, and the next day it will be risotto, right? Okay, but the risotto is 68 dirham instead of 53. Who cares? One risotto, please. It's not the choices are not reasonable. Okay, it's a toy. It's a pleasure. Luxury market works slightly different.
Okay. No, I'm just interested to see if it's affected or how it's affected you, and if you see any difference. And it really is different level. So the report,
as far as I remember, this part of the market was never affected in a real.
Okay. Final thing for you. I just want to make you happy. We're a little bit over time, but I wanted to bring this up because if you're here and there's no Ferrari to talk about, I don't want to leave you without a smile on your face. The new Testarossa.
Okay.
Tell me about it. Because I was reading a review overnight.
Against? First against hybrid.
Oh, okay.
Second against twin turbo instead of naturally aspirated V12.
Okay.
Finish.
And how do you feel about it? Because the review I read was a very positive review, and you mentioned it a couple of weeks ago. You're like, not sure, but you did concede you'd need to give it a go.
For sure, it's a complete car. For sure, the Ferrari get a proper experience from their mistakes making SF90 and 296. So we can expect something better. We don't know. Okay, if it's just copy paste from the 296, it's a headache. And the V8 twin turbo is complete with a hybrid system. It's extremely powerful. If you are not a freak who's taking care about how the power is generated, it doesn't matter for you. You just take a car on the road, flat out, and pay the fines.
That seems fair. Jacek Ziemek is the supercar guy. He's from X Motors. Good to see you.
Thank you.
Appreciate you coming in. Morning Drive, we're going to be on Sheikh Zayed Road. We have a front row seat to the future of mobility. We're broadcasting live from Alpha Tame Volvo's brand new flagship showroom on Sheikh Zayed Road, the largest Volvo showroom in the UAE. So look out for exclusive conversations. You can catch the full episodes across all of the Mira Business FM platforms and channels.
Mira Business FM, Dubai's home of business radio. Business FM, Dubai's home of business radio.
This is the morning drive at Mira Business FM. Deep insight into some sensible personal finance habits this morning. Charlie Nunn is a guy who runs Lloyds Bank in the United Kingdom. He's the CEO. And he recently gave some pretty blunt advice on why he hates budgeting and why he's terrified of social media finfluencers. But he also offered some really sensible personal finance habits as well. So we're going to test that advice against our experience here in the UAE, the reality of living in a place like the UAE, see how it fits. So I'm kind of twisting it. James Thomas, who joins me now.
Good morning.
It's an interesting article, this BBC article.
BBC article, yes. I just thought it was quite pertinent to a number of the conversations we've had in the recent past. And when it's coming from the CEO of one of the biggest 4 banks in the UK, I just thought it was something we maybe should listen to and have a take about.
Well, he's probably a man that knows a thing or two about finance, so that makes some sense. So he talks about, let's jump in, he talks about automated savings, right, to avoid the budgeting trap. So that makes sense. So pay yourself first, get it done, get it out of the way, don't worry about it, make it automated, forget about it.
Exactly.
One of the fundamentals.
One of the fundamentals, main things that we have discussed. Because if it's automated, you don't have to worry about it. You know it's taken care of. You're not then going to suddenly get that red bill or red email. You've missed this payment. You haven't done this. You haven't done the other. Or worse, something just stops working.
Yeah.
And then you realise it's because something hasn't been paid. It's just a really simple, actually where tech can be helpful in the sense you can just automate all of this stuff, make it very straightforward, save a huge amount of time.
It's just when you get that salary drop, right?
Yes.
You get the salary drop, and then you do that, and then you look at the extra drop once you've had the salary drop. But it's always a bit disappointing.
It can be disappointing.
But at least you know you've done everything.
But at least you know you've done it.
Right,
and again, I guess I should caveat that with just to make sure you do check what is going out, just to make sure the numbers are correct, because even with all this automation, things can sometimes go wrong.
Okay, so let me just jump in there for a second, because there will be people who will be saying, look, even when I do that, I can't do that. I can't get round to doing that. This is how I live and this is how things are, right? So living costs are very high in Dubai.
Yes.
Lifestyle creep is a thing. We've talked about that. It's kind of the norm, right? So is automation enough? Do you need like a big man with a bat threatening it? Or what is it that you need to make sure you save? Is it just a hard lesson to be learned?
I think it probably is. Yeah. I mean, I guess I wouldn't, someone coming swinging baseball bats at you probably.
No, I'm not suggesting
No,
that.
I know you're not.
But bit of extra hyperbole.
But no, why I mention it is because if you need that level of persuasion to make you, it's one of these adult things. It's being an adulting, isn't it?
It is.
And while it can be rather dull, it is absolutely essential.
The thing is, it's funny, but you hear that. I mean, I talk to people and it's just, I could never save. I can't do that. And I always think,
yes, you can.
You could.
And
it's whether you want to or not. It's up to you.
Precisely. That's the key.
Yeah.
It's just to spend, we're not talking hours a week, a month, it's a few minutes.
Yeah.
It's just to sit down with a coffee, just every now and then, and just check the bank statement, make sure everything is correct.
Do you know, there are things that you hate doing though. Like
I don't doubt it's not fun.
No, but I've got this reminder in my phone. I've got to book a flight, and my most hated thing that I hate doing above anything else is booking airline tickets and stuff like that. I don't even know what it is, because I know it's not difficult, but I just put it off and I put it off and I put it off, and then the price goes up and I think, I've got to do it, and then I eventually do it. So I normally get my son to do it because he's really good at it and does it really fast. I just hate it, and for a lot of people, I think that's how they feel about money.
Very much
dealing
so.
With it.
It is, because again, we're touching on previous conversations, but it's no harm to remind people. It's just one of those, much like many things in life. We don't like it, and therefore we procrastinate and we put it off, and that problem gets in our minds, like you've just said, the flight. Oh, got to do it, and it just gets. And eventually, you just do it.
I've had a reminder all week. We're now at Thursday, so I've got to do it tonight.
So that's been ticking along for 4 days. It's been building up, and it's something relatively minor.
I apologise for making you my therapist.
No, and that's dare I say, part of the job of financial planning is to be a therapist of sorts. I can't pretend that I'm going to be able to sort out your deepest, darkest emotional issues, but if we can take the weight of...
You think I have emotional issues?
Maybe you do. Not you personally, but the audience listening. But if we can help with one area, as we've discussed, it's just that relief, that weight lifted, that we know that these things have been sorted.
No, that's fair. So that was the first point. Yeah. This CEO, it's Charlie Nunn, he suggests having 1 to 3 months' salary, we talked about this lots of times, as an emergency fund. Just relate this to the UAE, to Dubai, where we're sat now. You know, but the hire and fire nature of some sectors here, we move at a very fast pace, things change very quickly. Should you be aiming a little bit higher than 1 to 3 months? I would contend
I've always suggested 3 to 6.
Yeah, that's what
but
I thought.
Again, it's semantics. It's having an amount. The example I've always used, the washing machine breaks, fridge freezer packs up. You've got enough money that you can just go and buy a new one and replace the contents and not be, the car breaks down, whatever it might be. That unexpected cost.
Yeah.
The emergency flight home. Use that again. Something has happened. You want to, and you can just pay for it. Whether that's 1, 3, or 6 months, it's what you feel comfortable with. But it's having that emergency reserve buffer available to you.
And that's over and above, your savings. It's having that amount there, which is accessible.
Yes.
Right. Okay. Is it okay to have that amount there as a credit card rather than an amount?
I would be very hesitant.
Oh, I'm looking at you, and it's not. No, it's
only
definitely
because,
not.
Yes, a credit card can be that emergency fallback position.
Yeah,
of course it can, because that can pay for the flight, it can pay for the washing machine, it can pay for whatever it might be. But you then need to have the money, your money, because as we've discussed again, the credit card is not your money; it's the credit card provider's money, and they will charge you very significantly for the pleasure of using that money if you do not repay it at the end of the month or the time period when it's due. So, yes, and again, I'm all for using them, get some points, whatever it might be, flight point, air miles, whatever. But you need to have the cash reserve in your bank account sitting there, in my opinion, so that you can be able to cover that if it arises.
I'm just thinking here. Is there such a thing as over-saving? I don't know. Because of where we are now, things are more uncertain. Do you ever speak to people that are maybe saving a little bit too aggressively? Is that not a thing? I'm just wondering.
It's a very good question, and quite. It's a rarity.
I bet it is.
Come across people who,
to the detriment of other things that they might be doing.
As I've always said, it's a balance,
right?
And it has been very infrequent, but on a couple of occasions, I've met someone who's just laser-guided focus is all about saving and nothing else, to the detriment, as you rightly mentioned, of living life, in my opinion. Staying in, not going out, not meeting friends, not going on holidays, just not living, in my opinion. As I say, it's always a balance.
I'm thinking of one particular person I know who I think maybe could get out a bit more. Says me, who doesn't that much.
No, but again, it's always about
a little
choice.
Bit over the top.
Yes.
But I suppose, no, it is. It's an individual thing. But I just wonder if that's something.
But it's also be aware of, just not to reduce your standard of living for your future self. Yes, your future self, I'm sure, will be very happy, but a more common response to that is you spend your whole life being very diligent and saving, and then when that retirement arrives and you've
You can't
ingrained
Yeah.
yourself so deeply that it's all about saving that you can't bring yourself to spend, and that's even more heartbreaking. I think you die a millionaire. Well, you want to die a pauper.
Yeah,
In,
well,
the sen-
in an ideal
in
world.
an
yeah.
ideal world, and
Yeah.
of course, we don't know when the last day on the planet is. If we did, then we could just plan perfectly and say, right, And again, maybe that's a very strange way to look at it, but so many people die richer than they retired because they've carried on that saving mentality rather than spending that money, going on the holidays, taking the trips, taking the grandchildren out, whatever it might be.
Yeah.
To find themselves on their deathbed with more money than they stopped working with.
Well, it seems dark, but these are the questions you have to ask.
You
don't
do. It does seem dark, and I hope it doesn't, because again, this is going to happen to all of us.
Yeah, yeah.
And therefore, if we don't talk about it, it's like the health issues, isn't it? We bury it. Well, we don't. If we bury it and don't talk about it, they can get worse and worse
They
and
can get
worse.
worse, yeah, absolutely.
Whereas we talk about it, we get open, realise that money isn't a dirty word. It's something to be enjoyed and cherished and utilised for our benefit and work for us rather than us working for it.
Okay.
Yeah,
The
very
philosophy.
deep, very philosophical point of view.
According to James Thomas.
Yeah.
No, I think that's fair. The next thing on this CEO list, if you like, there were 5 points actually. This is the second one: money and relationships. So,
Vital.
CEO Charlie Nutt advocates for complete transparency in a joint account, but in a household where, let's say, one partner's a local contract, the other's a freelancer. When you talk to people, how do you handle the conversations that they have? What do you hear from those conversations when if there's friction there? Because potentially
some people,
there is.
It's completely open and there's no secrets. Others are the complete opposite. Their partners have no idea what they earn. They have separate bank accounts.
Yeah.
They don't share any information. To me, again, my personal opinion, I think that's a recipe for disaster because you just become, or can become, you just don't know what's going on. How do you plan, and how do you plan a future when you don't know what each other are earning, whether who's bringing what to the party? That's not to say, as I say, it's not to say because one maybe earns more than the other, as you rightly say, in this day and age, someone's a contractor and therefore their salary or earnings are more.
But these are specifically Dubai kind of
Yes.
potential
Well, they're actually worldwide now.
issues. Well, they're probably true.
But
yeah,
certainly
yeah.
Dubai in particular. I mean, to start with, at least to have a joint account
Right.
that both of you funnel money into, so that housing cost can be paid for together. So
Groceries, whatever. Yeah.
yeah,
Okay.
and then always
yeah.
have a separate account that's your fun money, call it what you will, that you can use for your enjoyment.
Mm.
Whereas if you don't have that combined account, I just think who's paying for what? You can very quickly become very, or it builds resentment if you find yourself paying, feel like you're paying for more.
That's the heart of the question, really.
Yes.
The resentment does build in many cases with money. Unfortunately, it's just a thing that happens. It's almost unavoidable. There's a fun aspect to this as well. So I can follow my wife around stores because I get a text message.
You got the text message. Exactly.
She's away at the moment, so quite often I'll text her and say, "So, what did you buy at XX restaurant or whatever it was?" And she just sends me rude words back, generally speaking. But there you are. But that's always amusing. So there's that way of looking at it too.
Yes, as I say, that's a fun way to
Perhaps, but life's small pleasures.
yes.
So Dubai is less and less transient, heavily expatriate population. We understand that the transient nature is kind of lessened over
Yes.
time, but it still is to a great extent. So when you talk to couples, for example, how do you decide on long-term goals versus kind of the short-term Dubai lifestyle goals? Because that's hard to make those meet, I would guess.
It can be, but again, as we were just discussing, long-term goals, different countries you might want to retire to. Well, then the plan is that, right, I'm this age now, I want to retire then. What's the strategy to get there? And that's then very much that both parties need to be bought into it. And that's where the joint account strategy, in my opinion, works, because you both put the agreed amount into that account, and then that's then invested from that pot, as opposed to not knowing who's got what and where it's being funded from. And it just brings some, dare I say, discipline to it, because, and also hopefully that joint excitement, perhaps too strong a word, but we're then funding our future, our life together. We both are putting into this. We can then invest, and then we can see, okay, we've now built X towards our goal of Y.
So you're building anticipation as well as a fund, aren't you?
So that's how I would always approach it with a couple, that perhaps, because again, most schooling is woefully poor in personal finance, and so
most schooling is non-existent in personal finance.
Exactly, and in business, and in there's lots of business studies and economics, but that's typically on
it's
country
completely
level,
different level,
not individual level. Yeah. And this is where, as I say, communication is key. And that's where I often find you mentioned counselling, but it becomes it's an educational counselling to say, look, this is how we can build your future together. But to do that, the practical measures are that you two need to be able to share and discuss and be aware of what you're bringing to the party.
Okay. So, no, you are a counsellor of sorts. I hadn't really thought it through, but I mean, it's true. One of the things about this article, we're talking about an article, it's a BBC article, and it's an interview with Charlie Nunn, who's the CEO of Lloyds Bank, which is a big high street bank in the United Kingdom. And we're trying to kind of relate it to the experience here in Dubai. There's a lot of really good points. One of the things that stood out was Nunn said he hates budgeting. And one of the fundamentals of personal financial planning, any financial planning, is the budget, of course. So what's a better alternative to a traditional kind of spreadsheet that doesn't cause arguments, or a different way of budgeting? Because I don't know how you do that. Again, it's communication, it's decision-making, it's sensible approach,
Yeah, I guess he's just been very honest with his point of view about hating budgeting, and always has. But I bet you, if you speak to his wife, they do budget and plan and have a strategy for their...
Maybe she does it because he just can't be bothered. I
he's
get my son to book the flights. I mean, who knows?
He's budgeting to run the bank. But then he also adds, move money in the current account and decide, and then when to move it into savings, and do it as soon as you can. So while he's, again, not procrastinating, get it done. Have that emergency fund. He mentioned a broken boiler or car repairs. Perhaps air conditioning would be a better one for us here.
Probably.
And he mentioned 3 months' salary again. So while he's saying he doesn't like it, hates it, in fact, the following statements would indicate he is still doing it.
He's still doing it, maybe under duress,
yes.
But the point is it's being done.
Yes.
Okay. If you're, single income households, one breadwinner, one partner manages the finances, while the other is potentially in the dark. What are the specific risks there?
Well, again, that's what we've just discussing with the couples not sharing.
Encouraging sharing.
Yeah, it's to encourage that, while one partner's at work, and if the other is then running the household, is the house CEO or CFO or both, they just, again, communication, talk. What do we need? How much do we need? What do we need to do? What are the expenses this month? What?
It's being part of the conversation.
Being part of the conversation, and again, appreciate when if one partner is out at work and the other is at home looking after maybe children, school runs, activities, both are vital parts of the strategy of running that house. And probably come an evening, the last thing they want to do is talk about finances. But it's just finding that 5 or 10 minutes, put the phone down, children, if they're in bed or watching TV or whatever it might be, just have a conversation and say, right, this is where we're at. And so both parties are on board.
Okay, what about this one? You will have seen this, I have no doubt. The couples that move here and want to keep up with the luxury standards that we apparently, according to the newspapers, are all living, parking our supercars outside the five-star hotels at the weekends. I think not.
No.
But what's your advice for people that are maybe getting a bit carried away and aren't, budgeting or they're overspending?
Yeah, I mean, again, I won't mention. There was an online post about taking a loan to buy a luxury watch,
Right.
because the person was about to go back home and wanted this watch to effectively show their success in
affect some
investing.
status.
Yes. Now,
Right.
we've both been very cynical about this, but because I think realistically it is, but it's the world we live in. Again, and I have to be fair, the comments were pretty sharp,
They're quite brutal.
brutal,
Yeah.
but it's just perhaps it's having that reality check. Do you really need these things? And can you afford them? If you can afford them, then crack on. And if it's something, again, I would always say it's something that you need to have an interest and a passion about. If it is luxury watches, you appreciate the mechanical mechanisms and where they're made and the history, much like cars. The manufacturers have a lot of history, and perhaps if you're into motorsport and the race wins and whatever it might be, then great, have that passion, because again, there will be a circle of people who also have that interest and passion. But if it's purely just to, as you mentioned, park outside that luxury hotel and be able to show off, frankly, then, and if it's been done on borrowed money, then it's a recipe for disaster, because at some point that needs to be repaid.
Exactly, that's the point. That's the realization. There's a guy on Instagram, I've seen him a few times, and he basically drives up to hotels in Dubai and opens the door of whatever supercar he's got, throws his shoes on the floor, and then jumps into his shoes and enters the hotel. And that seems to be the whole account. And I look at it and I watch this content, and it's remarkable. And I think, first of all, I think, why am I watching this?
Well,
and then second,
yes.
I think,
Why?
Who are you?
Yeah.
What are you doing? I don't know who it is.
No.
But the thing is, these things are there, and this is the perception. And I think for a lot of people, maybe that's exciting, maybe it's interesting. It's
Maybe
not
it
for
is
me
exciting.
to judge anybody, but if you're part of that, if you're spending money that isn't necessarily yours,
But there's
an
again,
issue coming.
Absolutely. There's other channels that, again, I've come across that then go behind the scenes. The car's rented, perhaps even the clothes are rented.
True.
When you see someone in a private jet, where you can quite easily get actually just sitting it on the ground. You're not even actually going anywhere, and just paint this picture for whom. It's spending money you don't have to impress people you don't like. It's what are you? But it's very easy to get carried away in that lifestyle if you're not careful.
Yeah, it's asking yourself if you can afford it. Whatever
Yes.
you do, whatever you can afford to do. Another statement in this article is give children pocket money.
Yeah, I like this one.
I thought you'd like that, because it's that the understanding of the actual value of money, isn't it?
It is.
Not knowing.
It's funny talking when. They've grown up now, but friends when they were toddlers initially, they were far more interested in shiny coins.
Oh,
even
for
if
sure.
Even if it was a penny or a 5 pence versus a £5 note. But as they've got older, of course, they're now realising what it means. And again, it's just some great beginning to their financial literacy and how to understand what money really is and what it does and what it's for.
Yeah.
By giving them pocket money, but also then perhaps not giving them everything they ask for, saying, no, save your pocket money, whether you buy it in the end or whatever, but just to get them into the understanding of what this stuff is and how it works.
Yeah. Understand the value.
Understand
rather
the
than
value.
Understanding the cost.
Yes.
The price kind
Indeed.
of thing. This is something you've talked about a lot, and I now do this, and I like this. The idea that you should pause before you buy. I mean, there's a security aspect to this if you're buying online, of course, as well, depending on where you buy from. But there's also the budget aspect, and it's something I do now. I'll say, I told you I want that watch, and you were like, no, Paul, just put it in the cart.
I didn't say no. Put it in the cart.
Put it in the cart, and then if you want it the next day and you can afford it, then you should do that. And of course, the next day I'm like, I don't need that watch because I've got one. Yeah. But it's good advice, I think.
And that's one of the reasons actually why I forwarded this to you, because when I said, look, even the CEO of one of the UK's biggest banks is saying this. It really just validates the point that whatever it may be, because as again, showing our age in the past, we would, I need X or Y. We'd have to drive or go to the shops, the high street, have a look around, and you're probably looking 2 or 3 shops, decide whether you wanted it, try it on, or if it was an item of clothing, shoes, whatever it might be. Whereas now it's just so easy. We log on to our computer, our phone, go to a site, type in what we're looking for, and it's there. And then it's very easy because our credit card details are already logged on, probably. We just click go, and then 24 hours later, or in some cases 15 minutes later, it's at our doorstep.
Yeah, it's far easier to be impulsive.
So much easier.
Yeah.
And then the guy knocks on the door, hands over the bag, and you open it and go, and you put it on the shelf, and you never touch it again.
It's funny that I like it when the delivery man brings me things. I'm like, oh, it's like a present. And I know what it is.
Yes.
And it's like, washing
Well,
powder.
it is,
but I
isn't it?
still like opening it.
And that's what it's all playing to.
Sure.
It's that dopamine hit of Christmas time, of our birthdays, when we get some. And of course, even though we know what's in there, because even if, we've ordered the item, but it still plays to those emotions.
I need to work on getting a bit more depth in my life. That's what I do know. The last thing, and I want to bring this up because there are so many people peddling nonsense online.
Yes.
The finfluencer thing, and it's not fair to say that all are, because obviously not all are. But one of the big warnings that this CEO Charlie Nunn gives is, due diligence warning: take care, finfluencers. Protect against that. He's very concerned about people purporting to be experts online, Instagram, TikTok, wherever. So how do you spot a good, legit advisor against a paid promoter? There's a question.
Well, it can be very difficult. Yes.
Yeah, it can.
But look for multiple sources. Look, you will find, again, I've used myself, I've used the same, very similar points to Charlie here. So therefore, and get a third person, you think, well, actually, suddenly this advice is coming from multiple sources. Therefore, it's probably more believable than, say, that example of just someone sitting in a private yacht, plane, supercar, drinking some expensive champagne, wearing designer clothes. Well, what is it?
Doesn't sound bad to me.
It doesn't sound bad, no. But the reality is they're probably trying to sell you something.
Yeah, absolutely right.
Whereas if the advice that's been given is actually far more realistic. Again, that's the other thing. Oh, great returns. It's this, it's that. Some of the numbers start to look too good to be true.
They probably are. Yeah, okay.
Crypto coin, again, meme coins even more so. Crypto coins now, well, is it 10 years? It's probably more. Are meant to be the next best thing.
Mm-hmm.
Or are we going to use them as replacement for currency? Well, I still don't really see that. And indeed, if anything, it's going to be the major currencies becoming a digital currency, and we will use those.
That seems to be...
As an example.
Yeah.
So therefore, again, it just raises a question as to the usefulness of picking on cryptocurrency. But anything that's purporting to be too good to be true, it generally is. And utilising, if it's something you buy through a bank, a credit card, you have some level of protection.
Mm.
And if it's through ourselves with central bank insurance authority protection, you have that fallback position that should the advice that I've given you deemed to be incorrect, then there's some recompense. Likewise, in the UK and other countries, someone online that's not regulated anywhere, you have no protection. And obviously then you send your hard-earned money from your bank. This is obviously where Charlie's coming from.
Yeah.
If you're utilising something in the UK or a regulated market, his company can help you.
Yeah.
If it's not protected in any which way, there's nothing they can do. And they're then getting the calls, emails from customers. So can you help? I was like, well, no, because you legitimately sent it to a bank account, and that's now gone.
Yeah, you asked us to do it. We did it. That's.
And you will find, and again, sometimes you think, oh, why am I being asked all these questions? But this is the reason why. Is this a legitimate bank account? Do you know the person you're sending these funds to? I was trying to send my mum some money the other day. Do you know? Well, yeah, I think I know who she is. Is it a genuine transaction? But it's just to make sure that before you press go and before the bank sends those funds, you're comfortable that whatever it is a genuine location that those funds have been sent to.
Yeah. Final thing that he says in this article, and a lot of this I feel is kind of pointed, a lot of the articles kind of pointed at maybe a younger audience,
Yes.
but I think it's relevant.
It's
It doesn't matter how
universal.
old you are.
Yep.
It is universal. But this was, I thought, really good advice. Most people who haven't got much money shouldn't be taking high risks. That's a reasonable thing to say. I think your risk appetite grows as you start to bank some cash, in most cases.
In most cases. The only caveat I would put there, and this is actually coming from the UK, is the UK has actually been, in my opinion, is too little risk.
Right.
There's too much money in cash accounts. There's
Too much money on,
on deposits.
On deposit, yeah. Yeah.
And what we're talking about is levels of risk.
Right.
Because in the earlier he was mentioning cryptocurrencies and other things. If we've got that our risk pyramid and the bottom being very low and the top being much higher, it's almost turned into that barbell. There's people are going for the get rich quick, and then there's still the bank account. The sweet spot is in the middle.
Right, okay.
It's funds, it's stocks, it's companies that are quoted on stock markets. It's that middle area. That's where.
That's also the understanding point, isn't it?
It is.
You get to a point where you start
It
to
is.
understand. I'm comfortable with this. I'm
Indeed.
okay with this. I could probably step up and do this, and I may even.
Indices, S&P 500,
Yeah,
FTSE 100, things like that, where they've been around for the FTSE 100 years. So there's track records, there's history. Investing into that, your money, while it may rise and fall, it will still have a value and continue to have a value into the future, and typically would outperform cash. Will it outperform those high risk? Maybe not in the short term, but I would feel far more comfortable putting my money there than in those higher risk strategies, because I'm more comfortable to know that it will still be there in 50 years' time when I want it in my pension, for example.
For sure.
So that's what I think he's intimating.
I know what you mean. I mean, I understand that. It's just an interesting article.
It is.
It's a BBC article.
It's
You can
very
find it
short,
online.
actually, but he covers an awful lot of points. It's very succinct.
Yeah, Charlie Nunn is the CEO of Lloyds Bank, which is it's a UK high street bank, very famous bank, but he knows a thing or two about finance. That is for sure. James Thomas also knows a thing or two about finance and joins us every Thursday morning. He's a UAE licensed independent financial consultant. Good to see you.
Likewise, thank you.
Appreciate it. Don't forget to like and subscribe wherever you are enjoying this content from. This is Mira Business FM.
Mira Business FM, Dubai's home of business radio.